Good afternoon, everybody. This is your market update for January 24th. Happy Tuesday to you. I hope you're having a great day and a great week so far. We'll jump right into it. After 2 days of consecutive gains in the stock market, futures had indicated this morning that the Dow, S&P 500, and NASDAQ were all slated to open down on the day, which is exactly what happened. Since then, the Dow has turned positive, but it's only up 12 points, so we'll pretty much call it flat on the day. NASDAQ and S&P 500 both down. Mortgage-backed securities ending their day yesterday almost where they started. Yesterday, the mortgage-backed security market opened 14 basis points down and closed off of their worst levels of the day, but just slightly, ended up closing down 11 basis points. This morning, mortgage-backed securities opened down 9 basis points, but has since then turned positive, currently up 9 basis points. So certainly trending in the right direction. Hopefully that will continue throughout the course of the week. So a few things going on in the marketplace. Obviously, the big hitter this week, as I mentioned before, is going to be the PCE report, the Personal Consumer Expenditures Report, which is the Federal Reserve's favorite measure of inflation. Of course, they're meeting on the 29th of January through the 1st of February. This report's coming out right before that meeting, so it's certainly something they're going to be looking strongly at. The market is anticipating that the core rate as part of the PCE is going to drop from 4.7% down to 4.4%. The core rate actually strips out numbers for food and energy. This is the number when the Federal Reserve talks about keeping their core inflation rate at 2%, which is their target. This is the number that they're referring to. So if it drops from 4.7% to 4.4%, certainly the rate hikes are having their desired impact, but still well off of the Fed's target rate of 2%. So we'll wait and see what happens. If the core rate actually drops more than what the market's anticipating, could be really good for mortgage-backed securities and really good for interest rates. So we'll have to wait and see what's occurring or what happens with that report. The other thing that continues to come up is there's key economic indicators that are flagging for recession. One of those has been, if you look at the difference between long-term treasury yields and short-term treasury yields, there's been what they call a yield curve inversion that's been in place for a few months now. And that's usually a pretty strong indicator of a pending recession that's on the way. There's also some other economic indicators that are flagging recession that are typically pretty accurate as well. During a recession, in addition to inflation numbers coming down, which are good for interest rates, anytime that we enter a recession, historically speaking, you can always see that mortgage rates will come down during a recession as well. So, between inflation numbers continuing to drop and, key indicators flagging for recession, I think mortgage-backed securities and interest rates as a result are certainly trending towards a lower point, which is great. Certainly, we want any recession that does occur to be a very mild recession. It's basically slowing economic activity and slowing inflation. So anyways, that is my spiel for today. We will continue to keep you updated, obviously looking towards the end of the week at the PCE report and what impact that has on the markets moving forward. In the meantime, I hope that you all have a fantastic day, and I will see you tomorrow morning. Thanks so much.